So how did I make $546 trading Google call options? So looking at Google, that's 11:46 yesterday. 11:46. This candle, but this candle right here. So I bought Google call options, waited for a bounce off the 180-day moving average. That didn't happen, and so then at 12:50 I bought more call options of Google. So 12:50, which is it this candle? No, not this one, but this candle right here. So basically what I did was I saw that basically Google was approaching this little small support level around 176.50, and so on this candle right here, once I saw that it approached that support level that I just mentioned, I bought more Google call options, but it broke through it. And then at 14:36, which was my last time, let's see. Okay, basically 14:36 was my last time buying Google call options, so this candle right here. And if I recall, I remember seeing the position being down either 8% or 9%, and so what I did was I just bought more call options of Google here on the 15 candle on the 30-minute time chart. So I just basically dollar cost averaged. And then basically today at 9:31, this candle, but this candle right here. So basically in the opening of the market, I sold out the position as quick as I could, and when I sold out the position, I made an easy gain of $546 trading Google call options. So this is a prime example of what I mean by when you see that you have money. When you have money in front of you, take that money and just move on to the next trade. Don't just hope that oh well, I think I can see more upside from my position that I'm in, and I'll make even more money if I wait a little bit longer. No. So my goal with that I tell everybody is that once you see that you have that money in front of you, take it, use it, make it useful for the next trade, and just repeat the process over and over again. So what I mean by that is that you have to, step one, pay very close attention to where it says 8.15%. So if you're trying to aim for a 5 or 10% gainer for that day, try to keep an eye on your percentage target for the day. So don't try changing percentage targets throughout the day because you feel like you could see more upside. Usually, that possibility of you having more upside and making more money could be possible, but at the same time, you're putting the money that you have in front of you, that's in front of you, on the line by risking losing it because you hope, because you're hoping that you could make more money if that position could go up even further. At that point, you're just kind of gambling, if I'm honest with you. So that's why I tell everyone that, you should focus on your percentage targets that you're trying to aim for that day. Specifically be realistic. Don't try to aim for exaggerated percentage gainers for example, like most, beginners, they try to think that they can aim for 50, 100% gainers. And is that possible? Totally. It's totally possible. But will that always happen every day? No, that's not going to happen every day. You're When you're in the stock market, you're always going to take wins and you're always going to take losses. That's just part of the game when it comes to trading. So for me, example, when I'm in a position and I'm feeling not so confident in that trade, I'll just, take a maximum loss of, 10 or 15%. Everyone's, different, but typically most of the times I try to stick to taking a minimum loss of 10%. So if my position is down 10% and I see that position that I'm in, the trend is not looking so good on the chart, I'll just, take the loss of 10%, move on to the next trade, try to aim for my next percentage target to be instead of being a 10% gainer, I'll try to aim for a 20% gainer. And sometimes I'll try to play long-term options, so options that expire in 6 months typically, or sometimes in 3 months, and that way I can recoup that previous loss that I had just taken. And basically I just try to take the approach of trading in the market a little bit more slow and steady instead of trying to revenge trade. So one thing that I notice is that when most people take their loss, they try to revenge trade on that particular stock that they traded. So is that usually a good idea? Sometimes it can be a good idea, but sometimes it's not typically a good idea, because when you go back into that particular stock that you just lost, usually your mindset it's not at a good point where it should be. So typically that's why I kind of recommend people where if you took a loss with that particular stock, I would say just move on to a different stock, try to clear your mind, or really just try to clear your mind and try to analyze some opportunities that could be out there. So there is this free website called finviz.com. Basically what you do is you do this, right? So you go here where it says screener and then click market cap, and I suggest Mega because honestly I recommend it for beginners. Performance, and then click where it says perf YTD, and is that correct? Yeah, and it's gonna show you a list of stocks from worst to best. So 1 through 20. So starting at 1 is from worst, and then all the way through 20, and beyond that is from best. So honestly, just try to analyze this list. Try to see if is that particular stock about to approach a major support level, or is it about to approach a major resistance level. That's where you can play the long-term game of leap options. And there you can, decide to play either calls or puts on that particular stock that you might be interested in playing in. So basically, just honestly, what I would say, just keep in mind of your percentage target that you're trying to aim for that day. Try to be disciplined. Try not to be greedy. Try to take the money when, you think it's time. Honestly, just go in with a game plan. So don't, if you're in a game plan and you decide to change your game plan, don't do that. Just go in how you, mentalize how you want to go in and get out as soon as you, make a quick profit in that position that you were in. So that is pretty much it. This is not financial advice. As always, take care and bye.